Welcome to the Business Growth Accelerator Show. Thank you so much for joining. Our primary goal here is to help you as an entrepreneur to grow your business fast with as little resources possible. We talk about everything from smart digital marketing skills and business strategy to motivation and soft skills. Top interviews with industry leaders to inspire and give you the skills to grow your business. I'm your host, Pierre Muller. Now let's jump in. Hello, everyone. Our special guest today is Craig Rattray. Craig is a highly skilled strategic finance director with almost 3 decades of analysis, forming and developing strategy, raising finance, and providing full strategic financial management. With a background as a Scottish chartered accountant and experience across companies of all sectors and sizes, Craig brings comprehensive insight and skill to major bottom line results. He's got significant experience of finance raising and development of financial infrastructure for growing companies to meet requirements of external investors and growth ambitions. He's comfortable engaging with investors, C-level execs, and boards of directors, and leading strategic finance matters from the front. He thrives on supporting companies experiencing change and challenge, including early development, growth, new target entry, acquisitions and scale-ups, as well as positioning for exit. His key focus is results-driven in increasing profitability, cash flow, and shareholder value. Craig, we are delighted to have you on the show. Welcome.
Thank you, Pierre. That sounds very interesting intro. Thank you.
Craig, now I think just reading up on your story before our conversation, it definitely seems like success didn't necessarily just fall into your lap, and it really came from hard work. Why don't you just start us off by just sharing with your story, everything that really just led up to the success that you have today, challenges you might have experienced and what helped you to overcome, sort of major pivot points around, along the journey, anything really that you feel comfortable to share with our audience.
Sure. Yeah. I think, Pierre, for most people, success is a result of hard work. There are some fortunate people in this world who, let's say have it come to them rather than having to go out and work hard for it. But I remember from a very, very young age, and I'm talking sort of 2, 3, 4, that sort of age, where my father sort of inbuilt into me that if I wanted anything, I had to work hard. We didn't have much. We lived in a council house. No one in our family had ever been to university, and I basically just worked hard throughout my schooling. I started with a couple of paper jobs when I was 13. I set up a discount sportswear business when I was 15, undercutting the PE teachers who weren't very happy with me. So that was my first venture into business at that time. And then basically went to university. I actually paid my way through university by working in McDonald's. So I was flipping burgers most evenings and at the weekend. And that sort of discipline of hard work is something I've just carried through. Finished my university degree in accounting and moved on to one of the big 6. There was 6 big accounting firms at that time. Joined Arthur Andersen and stayed there for 3 years, during which time I did a lot of corporate finance work. But my first couple of projects or pieces of work there were audit. And I quickly realized that I didn't like looking backwards. I didn't see the point. Why look back and tell us what happened last year? Because we know what happened last year. We were there. Let's record it quickly and move on. And I much preferred the corporate finance where we were looking forward and we were doing forecasts and we were thinking about what's going to happen to the business, or what do we want to happen to the business. And that then moved. I moved from there. I actually did a secondment to one of the private equity subsidiaries of one of the Scottish banks, and quickly realised that I much preferred investing than advising. So I did that, and I worked across 3 different private equity venture capital companies for about 6 years, and then I moved into industry. So bearing in mind that I'd spent 3 years training, 6 years in private equity, moved into industry as financial controller of a fairly small Glasgow-based engineering company, and it had just been acquired by a New York Stock Exchange listed company, and they needed someone to do 3-day flash figures and 5-day full reports, and really needed to manage all of the cash. During the next 12 months, I learned more than I did in the previous 9 years. because I was right at the front of everything. I was having to manage the cash. I was having to produce the results. I was reporting to my divisional office in Houston on a regular basis, as well as being ad hoc, and also reporting into the main head office in Portland and Oregon. So as I say, learned more during that 12 months than the previous 9 years, and it was a real eye opener for me, just in terms of how cash worked. That's where my whole affinity and an appreciation of cash came from, because before that, a lot of it was very theoretical.
Sure. Great, yeah, that's a wonderful story, and I think it's a great lesson for our audience in terms of hard work. Definitely didn't come easy, so I think well done for that. And I think for following your passion, definitely sounded like you knew sort of where you wanted to go, and you sort of were able to pivot and go in that direction. And I think incredible just to hear your experience. And I think who better to talk about cash flow and cash than someone like yourself. So let's sort of move into that topic. We know that cash is king. We know it's not about paper profit or the past, as you say. It's really about generating cash flow. So I guess the first step is probably taking just control of the current situation and current cash flow, and from there on improving it. So maybe let's start at the beginning. Let's talk about just taking control of cash flow first. What advice can you give our audience when it comes to firstly just taking control of the current cash flow situation?
For me, the key is making sure you've got up-to-date financial information. So making sure you're recording everything on a very tedious basis. And again, I go back to my formative years, not so much my father, but in my first role, doing accounting related work, and then having moved into private equity. And my boss at the time said to me, if you do everything every day, you're only ever a day behind. And it seems obvious, but if you think about it, if you do your bank rec every day, if you post your sales invoices every day, you post your purchase invoices every day, you're always up to date. And this is going back to the mid-90s, when we didn't have online accounting software. It was typically on someone's desktop. So it was more challenging to do that, but even then it wasn't impossible. And as I say, the thing I learned in my first role in industry was how to produce 3-day flash figures and 5-day full reporting packs. So there's a way around all of these things to get that information. So if you know where you are and you know where you've been, you've got a better idea of where you're going.
Yeah.
And I like to look at the three areas. So knowing where you are is your current management accounts, knowing where you've been is your historic, whether your statutory accounts or just prior management accounts, and then looking forward is your forecasts. And if you have that, you can then start looking at the cash flow. Because for me, cash flow is generally the thing that keeps business owners awake at night. If you Google what keeps business owners awake at night, if you've got some spare time, then you'll get 18, last time I did it was more than 18 million results.
Sure.
And if you start scrolling through the first few pages, it's about cash and cash flow. It's the things that business owners don't understand, and they don't understand how to manage and control because they've never been taught. Because most business owners set up a business to sell widgets, or to provide a particular service that they're an expert in, or to sell something that they've developed. They haven't been brought up in a finance background, and they haven't had to manage the cash flow. And where I think a lot of business owners go wrong is that they don't get the right advice. So they don't properly engage with accountants or FDs or finance professionals or business professionals who can actually explain what a set of accounts mean. Because most business owners don't properly understand, profit and loss account, or income statement, a balance sheet, and a cash flow, and how they all integrate. And it's a long-winded way to get into cash flow, but if you don't understand those things, it's very difficult to start managing cash flow. And one of the first things I do when I go into any business, if I'm going to be managing the cash and be involved in the financial side, is I'll get hold of the bank statements for the last 6 months, and I'll get hold of the sales ledger and the purchase ledger, and just look through them, just to get a feel for the dynamics, for the movements, just understand the inflows and the outflows, what's happening, and then look at the ledgers to get a feel for how they're moving. Because only by doing that do you get a proper feel for the cash inflows and outflows of the company. And until you do that, you can't actually start managing it until you understand it.
Yeah.
So for me, that's the starting point: up-to-date financial information and an understanding of the cash flow, and then you can start looking forward
Yeah, that's fantastic. I think, as you say, I mean, it's probably fair to say that most entrepreneurs, they have a passion for what they do, for maybe their product or their service or helping customers, and they might not necessarily have a passion for accounts, or necessarily have the training. I think, and I guess, as you say, so important then to outsource it to professionals. It doesn't have to be your expertise. In fact, it's good not, for the business owner to focus on the bigger picture and really to outsource to a financial professional, someone like yourselves who can really, coach you, but really just take it off your, off your lap kind of thing, and run with it. Because I think for a lot of entrepreneurs, it might seem like effort. It's something that's often being put on the back burner, but it's one of those things. If it's actually being done, it's quite freeing to be, in control of your business, to know what's going on. It's actually quite freeing. So it's one of those, I guess, those paradoxes where it takes a little bit of effort to do and to stay up to date. But once you've done it, it actually creates freedom. It's not a burden. It's really freeing.
Absolutely, and I think one of the things that the accounting and finance profession has done over the years is that as they've made accounts and finance into this black art that only they can understand, and it's not that difficult. Trust me, I'm not the cleverest person on the planet. I can understand it. I think it's very simple, and what I've found is that all of my clients are now financially literate. They will be able to talk to you about cash flow. They will tell you what the key numbers in their business are, because I've taught them to do that. They've learned, and it's not difficult. You've just got to break it down into the simple constituent parts. And as you say, Pierre, the initial work is right at the start, where you've just got to bring everything up to date. Get everything up to date. You get the forecast in place, and then you update it every day. Okay.
Yeah.
Some people might not want to update it every day. It's certainly easier if you update it every day, but you can update things weekly, and that goes for your accounts and for your cash, and you're then on top of it. And going back to your point about the business owner bringing in a finance professional, some businesses need a full-time finance professional. It depends what they're doing. It depends on the scale of the business. It depends on their ambition, because there's many roles to cover in finance. And again, this is something that a lot of business owners don't properly understand, is that, what's the difference between a bookkeeper and an FD and all of those roles in between, because most companies need all of those roles in between. And I've always said I would rather have a really good bookkeeper who processes everything on a daily basis than have a finance director in most businesses, because the finance director can't do their role without the detailed bookkeeping being done, and being done accurately and continuously. So all of that forms part of the financial infrastructure. And if the business doesn't need someone on a full-time basis, you can outsource most of these things. You can outsource your finance department. You can find a part-time FD, chief financial officer, as well, who can work with you. And it's ultimately down to the ambition of the business owner. Do you want to stay there turning over whatever number you're doing now and do that forever? And if that's the case, you probably need someone who's just good at looking back. If you have ambition in your business, if you want to take your business from 1 million to 2 to 5 to 10 to 20, that's where you need someone who can look forward. That's where it's important to manage your cash going forward, because you need to understand what resources you need to grow your business.
Yeah. So, and I like what you say also, just in terms of a coach and a partner to help you through it. I think, I guess, also for a lot of entrepreneurs, they might have had experience where it was either on school level or they did some sort of a course and it was difficult to comprehend the concepts. But if you sort of have a skilled, experienced financial professional, they can really make that very digestible, get to sort of the punchy numbers, and actually, coach an entrepreneur to actually do a lot of it themselves, and I guess sort of even enjoy the journey, because it's really, they make it easy to understand and they make it comprehensible. Yeah.
It is, and one of the other things I do when I go into the company is I ask the owner, the MD, the owner, the chief executive, whoever that may be, how much do you understand about accounts and finance? And 9 times out of 10, or 99 times out of 100, they'll say, yeah, sort of, yeah, I sort of understand it. So I'll then say to them, look, I'm really sorry if I offend you, but let's spend 10 minutes and I'll just talk you through my understanding of P&L, balance sheet, and cash flow, and how they all interact with each other, and some of the key numbers within each of those statements. And the number of times you can see the light bulb coming from out the top of the head.
Yeah.
And the questions then start. So that means that if I do this, then that happens. Or if I do more of that, then that. Or if I do less of that. And it's amazing, because in most businesses, there's probably only 2 or 3 numbers you really need to focus on as the business owner. Most people think it's revenue. It's generally not. If there's any number in the income statement, I'm more inclined to look at the gross profit percentage and the gross margin. But if you can get a business owner to focus on 2 or 3 things that they're constantly looking at, and whether that's the gross margin or the cash or something else that works for their industry, they can then start doing things that influence the performance of the business, rather than finding out 9 months later, oh, here's what you did last year. It's absolutely pointless at that stage, because you've lost the ability to change things going forward. So if you've got that robust information, someone who knows what they're doing, a business owner who is now switched on with the key things they need to do, it makes such a difference in terms of the performance.
Yeah, then really goes from sort of a to-do on our to-do list, where you can see there's actually lights going off and some good decisions that's actually being made, because it's really, they're sort of really internalizing it. Craig, now let's make it a bit practical. Now, let's say we've taken control of our cash flow as far as we can. We're sort of up to date. Now we need to start improving cash flow into the futures. You know what? And obviously, businesses are very different. The industries they operate in, the types of service and product, but sort of in general, what would you say are those major levers or key areas that businesses can look at to start improving their cash flow?
There's various different things, Pierre, and it's one of the reasons I wrote a book on cash flow with my good friend Jeff Boschwa recently. Mastering cash flow for business owners. I'll give it a quick plug. This book is a very simple, easy to read book that goes through key tips and how you can actually master cash flow, because you can. The key point, as we discussed earlier, is making sure your financial information is up to date. Once you've got that, you know where you are. You've got a good starting point. And then I like to split it into the cash outflows and the cash inflows. So your cash inflows come from your customers. So the products you've sold, the services you've provided, and that's much more difficult to forecast because it's not under your control. You may have agreed credit terms with someone where it's 7 days, 30 days, 45 days, whatever that may be. And the key is ensuring that those customers actually pay you on time. So you can do that by invoicing quickly. Don't wait to the end of the month to invoice. As soon as you provided the service or sold it, get the invoice out. Make sure all the details are right. Make sure the due date's on it, and then you can follow up in advance. You can certainly follow up if it's a couple of days late and say, you may have forgotten to pay me. Can you sort it out? So if you can get all of that right at the start, and also before you're taking on engaging with new people, it's often good to credit check them to make sure that they are worthy of the credit you're going to offer them. So you can do that through different credit agencies. You can ask the company for some information as well. You can get references from other people that they operate with as well. So that one has a bit more guesswork in it, because, as I say, it's not under your control. But there's many things that you can do that will put you in a much better position. In terms of the outflows, for me, they're a lot easier because you determine when the outflows are made. Now, you may well have certain payments that come out of your business bank account on a regular basis that you don't have real control over, where something comes out in the second of the month, an automatic payment, or you pay your salaries on the last Friday of the month or the last day of the month. And for me, when you're forecasting, these are the ones that you slot into your forecast first, because you can't really do anything about them. It could be loan repayments, it could be taxes you need to pay, whether employee taxes, corporation tax. So they all need to be factored in as well. But most of your supplier payments, you have the flexibility to determine the timing of them. Now, you'll have agreed certain terms with your supplier, and the honourable thing is to pay them within the correct terms. But if you're having cash flow issues, it's easy enough to pick up the phone and explain to them why you can't pay on time. And if you can take your inflows and your outflows into the forecast model, you can then start forecasting your cash. And if you're forecasting, I always refer to the rolling 13-week cash flow forecast, which is something I've done for many years. But there's many online accounting systems that are add-ins to things like QuickBooks and Xero, so you can use Float and Dry Run and Fluidly, and there's lots of them now.
Yeah.
But if you're forecasting out 13 weeks, that's 3 months. So you can see where your next pinch point is.
Mm.
And that gives you 3 months to do something about it. Assuming that you're constantly updating it on a weekly basis, then as you see that you've got a problem in 3 months, you can do something about it. You can try and bring in your cash quicker. You can try and push out your payments. You can go and raise some money from either the bank or from investors, depending on the reason for that cash outflow. But the thing you don't want to be funding is an aged debtors that's got lots of outstanding amounts in the end 2 or 3 columns, 60 days, 90 days, 120 days. That's the thing you need to stay on top of, and make sure that your customers are paying you, when they're supposed to pay you. But as I say, there's so many. I could spend a day talking to you about things how to improve cash bear.
Yeah, no, sure. I think that's some wonderful tips, and I love again, sort of the 13-week cash flow projection, because again, it enables a entrepreneur, business owner to make decisions in time. You can sort of start to see what's coming, and you can sort of, pivot and make
Yeah.
decisions up ahead. Craig, where can our audience go and find that book of yours?
Oh, you get it on Amazon. I think it's on various other places as well. It's Mastering Cash Flow for Business Owners.
Okay,
And
Mastering Cash Flow for Business Owners. Perfect. All right. So I'll go and check that out. I think that'll be a very good read. Okay, Craig. So let's pivot a bit. I mean, you've got so much to give, and I want to sort of touch on sort of the different topics in our time together. Let's just talk about building a valuable business asset. This is something also very close to my heart, because I've seen business owners working all of their lives, with this dream of selling the business one day and realizing the capital and sort of living their retirement dreams. And then when they get there, they're very disappointed. The value is not nearly what they thought what it's going to be, or they battle to sell it. So let's maybe just start with sort of the end in mind. What does it practically mean to build a business with an end in mind of potentially exiting it or selling it in the future and realizing that capital, for whatever purposes it might be, retirement, scaling down, whatever you want to call it?
very, very wide question,
Yeah.
Peter. I'll try and take it in different chunks. Yeah, it's great to start with the end in mind. So if your ambition is that you want to sell out for X million in 5 years, fantastic. Start there and work back. The biggest mistake I see business owners make is they make themselves too integral to the business. They don't build a team. And I I've written a lot of things on this in the course of the last week in my LinkedIn posts. And fun enough, my post yesterday was how to run your business from the beach. And
So that one, yeah.
it's something I talk to my clients about regularly. Now, it doesn't mean you need to be sitting on the beach or you have to go and sit on the beach. The point there is it's about the business running without you being there day to day. The business should run operationally without you having to make any decisions. The business owner should be up here looking at things, helicopter view, and looking at the bigger picture, looking at the strategic things that matter. And there should be a team in place who have the delegated authority to make decisions on an ongoing basis. And if you've got that, you've got a business to sell. Because if you flip that the other way and you as the business owner make all the decisions, anyone who wants to buy your business has to buy you as well, because the business can't function with you. Now, that generally doesn't work for 2 reasons. One, the guy who set up the business, or the man or the woman who set up the business, have set it up, and they may have been running it for many years. The last thing they want to do is to be reporting to someone, to be asking permission to do things. And similarly, the person who's buying it wants to buy a business that they typically can integrate into what they've got already, or they can start running it. So as an owner, if you can start pulling yourself out and putting in place systems, procedures, people, teams, whatever that may be, and it runs without you, your business is so much more valuable. For me, that's the starting point. Assuming that again, that you're profitable, you're generating cash. Let's assume all those financial things are taken as a given.
Yeah.
So the key there is is to build the team and build a business that you can sell. Build a business that someone can come in and almost take it over today and you can leave tomorrow. What tends to happen in most situations like that is that there will be a short handover period, because there's always things that the business owner will know that's perhaps not written down. But the more you can get written down, the more that you can devolve to that team, the more valuable your business becomes. And then you start looking at things like recurring revenue. Do you have revenue that comes into your business almost automatically every month that people pay for, whether you're providing a service or sending a product, so that you know at the start of the month that you've got X thousand or X million coming in without actually having to go out and make another sale, because it's a regular or a repeat purchase that someone's making. Look at differentiation. How is your business different from the business next door? What stops someone with more money than you coming and setting up next door to you and doing exactly what you do? Do you have intellectual property? Do you have particular products or services that no one else can provide? If you've got that, that's providing a huge amount of differentiation and protection to your business. And that increases the value of your business. That increases the strategic value of your business, that someone would be prepared to pay a premium for something like that because it is protected. There's many other things. You want to make sure that you are not heavily reliant, not just on the owner, but you don't want to be heavily reliant on any employee, any supplier, or any customer. So if you've got a business where 80% of your turnover is with one customer, that's a fairly risky position to be in. It's much better to have a better spread across the customer base. And similarly, if you've only got one key supplier for certain things, again, is very risky. Various other things you can do to keep your customers happy. You want to make sure that you're providing good service. You can look at doing regular engagement with your customers, customer satisfaction surveys, asking them are they happy. Just doing things and engaging that make people want to keep coming back and buy from you.
Yeah, sure. There's so much value there, and I'm thinking specifically about the first one you said, in terms of an owner removing himself from the business. And I think that's often so difficult for an entrepreneur, because it's their passion. They've made all the decisions, and I reckon it starts with just a mindset and a decision to start being proactive with this. As you say, it will take systems, it will take people, so it's quite an active role over the time. And I guess it starts with a decision, and I mean, what do you think? I guess then it will be sort of a once a month, meeting with, almost, with a CEO hat on, just to remove yourself from the business and see, okay, so what's next in terms of building systems, in terms of, recruiting people? I mean, what does that look like practically, just to pull away from all the daily, chaos in the business, and just to, be intentional and put those things in place over time?
I would go even further than that, Pierre, because there's things that the business owner can put in place where he can do his daily checks. And this goes back to my point about running your business from the beach. You wake up in the morning, you can log on to the accounting system. If it's properly integrated with your online banking system, you can see what your bank balance is. You can see a list of all of the people who owe you money. You can see a list of all of the people that you owe money to. And in terms of your operational system, your job management system, whatever that may be called, you can see the status of all of the different jobs and the projects you're working on. And that can be set up on a red, amber, green basis. So red, there's a problem, so you need to have a discussion, so you can pick up the phone and speak to whoever's involved in that. Amber, okay, let's keep an eye on that. It may need a phone call, it may need an email, but it's not, it's not something we necessarily need to deal with today. And if it's green, it's on budget, it's on target, we're making money. We don't even need to look at it. So things like that still means that the owner, whilst he's not running the business on a daily basis and being operationally involved, he is still involved at a high level and understands what's happening. And these things can all be put in place very simply.
Yeah.
I would still recommend on a monthly basis having a formal, whether it's a formal board meeting or formal finance meeting or a formal operational meeting, and sitting down with the key people in the team and understanding, what's happening, what did we say was going to happen, what actually happened, what was different, why was it different, was it good different, let's do more of it, was it bad different, let's go in and fix it. There's a whole variety of things can be done. But the key thing for me is still keeping the business owner up here. He doesn't need to be involved in the day-to-day, doesn't need to be involved in the detailed jobs or with the customers. He's got a team to do that. And if the business owner says he doesn't have, he can't rely on the team to do that, he's either got the wrong team or he's got the wrong mindset.
Yeah. No, totally. That makes a lot of sense. And in terms of just figuring out, the valuation model for a business, or actually knowing, how does the industry or the market value my business? I mean, would you say that's something that's beneficial to do, is to way up front sit down with someone like yourself or valuation experts, figure out how does the industry typically value my business? It's I assume not all are sort of on a 3 times annual profit, formula. So how does the industry actually value my business, and then sort of build your plan according to that, instead of just sort of running around, and trying to increase value.
It's great. It's a great way to look at it, Pierre. And as I say, if you start with the end in mind and understand where you're going and who the likely acquirer might be, then that gives you a better idea for the things you should be doing. And then you can look into your industry, because some industries have certain multiples. It could be a multiple of profit, it could be a multiple of turnover, it could be based on customers. There's lots of different metrics in different industries. And if you've got an understanding of that, you can start driving that metric within your business. Now, one of the things I do through my my certified value builder work actually provides a free valuation for businesses. So if they go into my website, excola33.com, they can click on a link, answer 45 mainly multiple choice questions, and they'll get a free valuation, detailed valuation report sent to them. 30-page document outlining, here's all the key drivers, here's your different score. Now, at the end of the day, that's theoretical, because as we both know, a business is only worth what someone will pay for it. So until you actually sell your business, you don't know what it's worth. And given the way the world has moved in the last 12 months, it's very difficult to look back historically as well and try and guess what that may be. But the key is looking at the metrics. And for me, in any business, regardless of sector, if you have good people, so you've got a good team, you've got a good amount of employees below that who provide the ongoing service, you've got good financial information, and you're on top of your cash flow, then you've got a good business. And yes, you may want to sell that someday, but if you've got it set up properly, that you don't need to do all of the day-to-day work, you can be anywhere still earning money from that business.
Yeah.
Regardless of what happens. And then ultimately you can sell. And if you do all of these right things about building the team and some of the other value building points we spoke on, you can wake up today and think about selling your business tomorrow. But there's many business owners think they can just decide today, I'm going to sell my business tomorrow, but they haven't thought about building a team. They haven't thought about the financial performance or the recurring revenue or their or their key differentiators. So I'll never say that you can't sell your business tomorrow. They probably could, but they will get an awful lot less than they think their business is worth.
Yeah.
And the key for me, whether you're building the business or whether you're building it to sell it, is just do all of these things, and it gives you choices. If you're profitable in generating cash, it creates choice, and it creates time to allow you to do things.
Yeah, that's wonderful. I mean, the last thing you want is to get to the point where you actually want to sell, you want to start making decisions, but you're really 5 years behind, and to trying to put all of those things in place then is quite difficult. So I guess the takeaway for every entrepreneur and business owner is really prioritizing this and getting the fundamentals in place. I think it's just coming back, more and more. It's so important to put those fundamentals in place. It might not be the most exciting job, at the time, but it's crucial. It's crucial to get control, to make good decisions, to it influences the value of your business. So really, really a crucial thing to do. I'll also put the link to that site. It's got a 33 in the show notes. So thanks for that, Craig. Also, I think that's a great tool for entrepreneurs to go and have a look. I just get a feel for that, in terms of what a business can be valued. Okay. Craig, I want to move sort of towards also what you're offering and so on, but maybe just sort of one last piece of advice or nugget that you can give to entrepreneurs in this time. It's obviously been sort of trying times. Lots of entrepreneurs will probably be under cash flow pressure, wanting to grow, but cash flow is tight. Any sort of last piece of advice that you can really just give our audience in terms of growth in these times?
Yeah, one. Okay. As, as you say, focus on cash. Yes. But start, as you say, start with the end in mind. Understand where you want to go to, and then try and backtrack and work out from where you are. What do you need to put in place to get there? What are the resources you need in terms of the people and the cash to get on that journey? And if you think about the various things we spoke about that help you improve the value of your business, if you focus on them, then you can go and find some external funding to allow you to do that. And for me, that's the key, because it's very hard to grow any business without any external funding, unless you're very fortunate where your customers are paying you quicker than you're having to pay your suppliers and your employees. Typically, you will need some form of, whether it's working capital or external investment. And I would just be inclined to start with the end in mind, and and have goals, and have stretch goals, and just find someone to come in and help you work with those goals in mind, and just go and deliver them.
Yeah. And again, I guess we're sort of circling back to the same point over and over, but I think it's so important. I guess once those fundamentals are in place, once we can track our cash flow, we can show it, to partners. It's so much easier to partner with either a professional or to get investors and funders into the business. So really, just so key to all aspects of the business.
If you can go to a bank or a funder and have a meeting with them and say, giving them financial information. Here's where I am. Here's my current management accounts. Here's where I've been. That's my historic accounts. And here's my forecast. Here's what I need to deliver that forecast. You will be better than 80% of the other businesses out there. And the bank or the investor will immediately look at you as if you know what you're doing, because you've got financial control of your business. And that puts you, as I say, into a completely different category. And if you've then got a good operational business that sits behind that, any business, they will have banks and investors falling over them. And I'm genuinely not exaggerating. If you've got a good business and you've got all of those things in place, then there is no lack of funding. You can go and read lots of stories about how much funding is out there looking for an appropriate home. So lack of funding should never be an excuse for any entrepreneur trying to grow their business.
Yeah, that's a great point. And I can testify to that. I also, spent some time in the business banking, the corporate business banking world. And I saw that. I mean, so banks are strict. I mean, sometimes, I do think that they're perhaps too strict, but they have a certain mandate and they can only operate within that mandate, and if a business comes to you and the financials are up to date and you see the cash flows and you understand the operator, it's so much easier to make a decision and help them. But, to help someone where you can see they're making money, there's money, but you can't see it on paper. You're not able to prove their case. It's very difficult. So yeah, no, thanks for that, Craig. Then lastly, please share with us just what are you sort of busy with, and just your different websites where our audience can go to learn more about what you offer.
Yeah, best way to connect with me is through LinkedIn. It's Craig Alexander Rattray. You'll find the links on the websites there as well. There's CraigAlexanderRattray.com, xgolo33.com, and crcorporatesolutions.co.uk.
Perfect. Craig, thank you so much. I mean, there was so much value that you provided today. We will put all the links in the show notes. Thank you so much for everything you shared, all the tips you shared, and I think it's really going to help entrepreneurs, quite a bit in these times. So for our audience, please make sure to go and have a look at the show notes. Go and have a look at all these URLs that we will provide. Thank you for joining us today, and we'll see all of you next time. Cheers. If you want to ensure that you get free access to the entire series of content and interviews, plus more tips, tools, and tricks to grow your business, be sure to join our free Facebook group, Get More Customers. You will find a link in the description or show notes. If you enjoyed this episode, please hit the love button depending on which platform you use. This will really help us to get this message out to more entrepreneurs. We would also love to hear from you, so please engage with us and reply. What business are you in, or which speakers would you love to hear on the show? See you next time. Cheers.